Another video on fractals in the community tab on the YouTube channel. You'll see obviously a little tab there. What I'm doing now is doing little voting polls, asking people what they want to see. And again, people have said want to see some fractals. So I've got a about 13-14 minute video. Takes you through everything we did on the 1st of May in the community, and we used fractals. We had a failure to launch the first time, put the trade in, didn't lose any money, and then put the second trade in and risked 1% and won 1.5%. And they'll show you the discipline of setting targets, the discipline of keeping your nerve, and active risk management as the trade progresses. So if you want to learn fractals and want to learn how to get into the market and stay in the market until your target actually hits, watch this video. I think you'll like it. If you like what you see, please subscribe to my channel and like the video. Even make a comment. It gets me enthusiastic to do more. Cheers, guys. Thank you.
Now, we need to have quite a large stop on this because we might get a flush out. So we're looking at 81.50 with a stop. Let's get a quite a meaty stop on this. 15 pips. We'll just change that 15 and 15, and we're going to. I'll tell you what we'll do. We will get out of the trap at 150. Let's just get ready to smash the button when the spread's going to reduce at exactly. It's going to go down to 1 exactly. I'm just wondering whether I don't want to get tagged in. Ideally, we'll buy the close, but be prepared to buy out of the trap. This market might, because the market is closed across Europe, and money might be waiting at 8 o'clock on the 1st of the month to go in. So ATR today is 10.8. We've got a bigger than an ATR. Get ready to smash this button or to buy on the close. Fade of the fill. So we can do a fade of the fill now, put that in there in case the market spikes down quickly. But if the market doesn't spike down, this level is looking highly likely to fly up. So get ready to smash the button. We don't need 15 pips, but 15 pips will give us a little bit of leg room for slippage. It would be nice if we can get the close, but get ready to smash the button on the open. So we've got 20 seconds to go. All the markets are starting to feed in. Everyone knows this is happening. Let's see, we can join the gravy train. We do need a stop under the close. This is big enough for the stop. But let's see, I'd like to get 50 or the close, 81.44 area. So get ready. Markets opened on the 1 minute. We can take this 1 minute frac as well. Take that 1 minute frac at 51.5. So whichever way we're in, we'll cancel this one now. This is all fast trading, 1st of the month, and we're expecting this market to get a wiggle on. So we're in the market. Stops had to be under the daily low, and we're running on. Expect potential resistance and the daily pivot. Once we get halfway there, we're going to stop to entry, completely free trade, completely risk-free. This market looks like it's going to, we don't know when it's going to punch through the daily pivot yet or not. So I would like to see if we can get 1% under the belt and then get a relax at 61.8% Fibo. And then a fractal. This could easily stop out as well. It's going to be very noisy this morning, so we just need to wait and watch. Don't get too trigger happy. It's just normal action this on the 1st of the month. This is why we put a stop to entry, because sometimes we're going to flush out, the market goes rattling up 0.5%, nearly 1%, then comes rattling back down again. And to take everyone's stops out, only to go back up again. So we just need to be prepared to get back in the market again. While we are looking, I'm just going to issue around the pivot. We kind of expect that. And we need to see this build. Not a lot of follow through on here. So we did get a spike, but it wasn't what we wanted. And the brokers looking at the order flows are suggesting there isn't a hope in hell. The way they're pricing it, I've seen a camera breakout long area. And as this market's pulling down, if it pulls down any further, stops us out, I might just put a cheeky call option in again for 81.50. I'll quickly show you those. No follow through, probably because it's a little bit in. I was expecting a nice spike then. We could have got away with a smaller stop, of course. The stop would have to be under the swing low, but I wanted to give it a bit of wiggle room today. The stop could have been 8, 9, could have been 10 pip stop. Technically, it was a 10 pip stop under the swing low from fair to the fill. Oh yeah, all right. So it did a 1%, a 1%er, but I just wanted to give it a bit more wiggle room this morning. There we are. We're out. So let's see if this market, how far this market's going to come down. This is fair to the fill. We will buy fair to the fill. We will buy fair to the fill, and we do need to be under this swing low here, the 2-day low. So if we're going to buy this, then we do need a stop of 8. Well, 10 pips. So 10 pips, guys. We are going to buy fair to the fill. We're also going to get the call options as well, and we're going to do that now. So we're going to have an order in here at 45. Get that up 45. So if the market comes down, we'll have a little bit of that. We'll move back up to, we'll extend this target back up into 15, so 1.5%. If we get it right now, effectively what we've got is we've got a call on the market hitting 81.50 today. In other words, staying above 81.50. With being first of the month, kind of probably highly likely it's probably going to stay above 81.50. But with everything shut, as I said, could be an issue. The market did come off a massive 79 pips last night, which is yesterday. 5-day ATR is 71, so it's done a 5-day ATR crash. So we do expect this market to finish higher than the close today. So 81.50s are 1.5% out of this one, but we'll have to wait and see. On balance volumes down, Renko's red. So we've had the initial impulse move that we expected. I was a little bit cautious going for 15 pips when 10 would have done, and it did 11. So that quite nice that the impulse was what we expected. I just wanted more wiggle room. I was expecting this market to challenge at least C-ball this morning, and then a push up so we can get some put options. But because the market is what we call this, technically buggering about, we need to look at a mechanism to get in the market without a stop, without having to put large stops in. As you know, I like really tight stops. I prefer to get it wrong and get out, or stop to entry, rather than sit and watch for 4 hours, 2 or 3 days for if we can just drift down to the pre-cash market. The market closed the gap at 7, but that's futures market. If I can get a little build here, so 8. There's a reversal fractal here. We just need to stop here. So there's a you bugger, come on, just give it another little tick. We've been down to 81.44.6, and we want the spread's just done as I think we will get tagged in here. We'll just have to see. Push down, we can say that it's come within 3 pips, so we can say that gap has been filled. I think what we'll do here, we'll trap the price 12 and 12. And what we're going to do here is we're at 46. Whatever we do, we're going to get right in on the close, and we're going to be under the 2-day low. So we're looking at 48 here. So whichever one goes in first, we're under the daily lows. If the market comes up, we'll get tagged in at 48. If the market comes further down into the close, we've missed it by 0.04 of a pip. We'll see. With whichever way the market runs, we will be in, and we're targeting a place where the market has already been. We're overcooked on the 1 minute down in here, and on the so into the 5 minutes, you can see that impulsive move. We need our stops under this area here. We should get tagged there. We've been tagged, so cancel that trade. So we have been tagged now. We're in, and we're looking for a 1.5% trade. Absolutely, as Jeff mentioned, we're 1% up now. Stop to break even. We should. It would be nice to get back to return to sender and make 1.5% on that. Let's just get down into the detail, because it's going to be tackling these levels again. Gold, we do need gold to get on flipping well, do something. But we've got alerts for that, and I want to go through some of the trading we did last night as well, and show you that. So I think what we'll do here, we'll make sure this time that we'll put five pips. I think can we get 500 this Icanashi candle? We can. So we're going to lock in 0.5%. So this is the perfect position to be in. If we lose, we win 0.5%. If we win, we win 1.5%. So again, just reminding people, we don't need a fractal now. We've had our launch. What we can concentrate on now is this 9 EMA. So long as even down into the 1 minute level, we are trading above the 9 EMA, then all systems are go, and we're in the market until the market tells us we're not. And it's as simple as that. Don't pull the trigger. We've got our target. What you can do is you can guarantee 1%, move it up to 10. That's about as close as we want to go. So if we lose, we win 1%. If we win, then we win 1.5%. Simple as that. The first trade was a failure to launch. We lost no money whatsoever. But it's all about risk management. If you can manage to not lose money, and then when the opportunity does come and you make it, that's a perfect storm. How many people have pulled the trigger?
I pulled it.
Yeah, I'm at 1.3% at the minute on the FTSE.
Was that Andy? Andy
Yeah.
SP and trigger. Anyway, you know, anything over 1% is subscribe to my channel and like the video. Even make a comment. It gets me enthusiastic to do more. Cheers, guys. Thank you.